Your business is failing, but you are not aware of it. Your business is going down, but you are not aware of it. But you have this business and you think that it's doing well, it's doing 100% or 82% well, but you are not aware that your business could actually or is actually going down because of some three vital, sensitive, very important things that you are not doing in that particular business of yours. And ladies and gentlemen, in the next 5 seconds, before I mention what I want to mention here, I'm going to give you those three things that you're not doing, and you need to start doing them as soon as possible, just to make sure that you save your business and make sure that your business or secure the going concern of that particular business. Remember, before I continue, my name is Sir John Mweri. I'm a professional accountant. And if you have been watching my videos, I normally come here, talk about investments, businesses, and so on and so on. And if you're watching this video from YouTube, make sure you subscribe to my YouTube channel. All right, and then you turn on the notification bell so that anytime I upload a video, YouTube is going to notify that Sir John Mweri has uploaded a video. Now, if you're watching this video from TikTok, also make sure that you give me a follow, a like, and a comment on both social media sites so that I can know what you think about this particular business. From this particular video. All right, now let's dive into the business of the day. Your business is going down because of three things that you're not doing. And the first thing that you're not doing, ladies and gentlemen, is lack of segregation of funds or money. You know, funds or money it's all the same, funds or money. Now, the moment you lack to segregate, ladies and gentlemen, to segregate is to separate. All right? This one is going to affect everybody because not every person who owns a business actually segregates or segregates or separates their funds. Now, when I talk about segregation of funds or separation of funds, what do I actually mean? This is what I mean. Let me first of all get rid of this one. Now, a business or any company. Now, let's talk about your business. That kiosk you own, that Mutumba business you own, that shop that you own. Now, it's constituted of what we call, number one, we have what we call capital. You know capital. Capital is what is going to constitute a business, right? Capital is going to constitute a business. And when you talk about capital, we are talking about the assets that you have bought. We are talking about the assets plus liabilities, all right? Liabilities. A business is going to be constituted by assets plus liabilities. So we normally say that assets plus liabilities is equals to the capital of your business. Now, in layman's language, for example, let's not talk about liabilities for now. Let's not talk about liabilities for now. Let's talk about assets. Now, when you talk about assets, and for example, I'm just going to take a very simple scenario about assets, and we are going to take assets that can be actually, that are convertible into cash faster than expected. For example, you know, you can be having a building or where you have put your business. That one is an asset, or land, it's an asset, but there is what you normally sell frequently so that you can convert it into cash. That's what we call inventory, or what we call stock, or what we call stock. This is what you normally sell so that you can get something, what we call profit. When you sell inventory or stock, you get what we call profit. But remember, if you have capital, for example, let's say the capital you have, if you have capital of 200K, or the inventory constitutes of 200,000, and you sell inventory constitutes of 150K, it means you are remaining with 50K. Now, 50K, now remember, this 50K is going to constitute of capital, the capital that you took here, and some profits. Now, what we are talking about, segregation or separation, the reason why I've gone through that long route so that I can take you where I want you to take, take you where you are supposed to be taken. I don't know what kind of an English is that. These two, nimekupeleka hiyo mlolongo ama hiyo njia yote so that I can bring you here. The capital and profits. This is what you need to separate. All right. Now you find most people do not know how to separate capital and profits. Remember, capital is supposed to go back to your business. Capital is supposed to go back to your business, and profits are supposed to go to your pocket. There is what you and out of these profits, there is what you pay yourself, there is what you pay your employees, there is what you take to grow that particular business. So the moment you don't separate capital, or for example, out of this 150K, 100 belongs to this one, capital 100 belongs to 100 belongs to 100 belongs to capital, and what you got as profits is 50K. Now 50K is what you're going to distribute to your liabilities. 50K is what you're going to distribute to your liabilities. For example, utalipa mfanyikazi, utalipa rent, utajilipa wewe mwenyewe, and then there is some money that you're going to take back to the business so that you can grow your business. That is the first thing you're not doing. If you're not separating capital and profits and taking that money as a whole, then there is a possibility that you are going to kill your business, because you're going to find yourself even taking the capital and using it to pay rent. And out of the explanation that I have given you here, it takes me to my point number 2, why your business is failing. It takes me to my point number 2, why your business is failing. And number 2 is lack of preparation of financial statements. Lack of preparation of financial statements. Remember, ladies and gentlemen, I've just given you a very simple explanation of how you're not separating your profits and the capital of the business. Now, when you lack to prepare financial statement, and a very simple financial statement that you lack to prepare is an income statement. And an income statement is going to have your receipts or revenues. For example, you have sold revenues of 150K, and then it's going to have your expenses here. Now, when you combine your expenses, rent, and salaries, when you combine them and you find them, they are like 30K, and then you find at the end of that you have a balance of 120K. Now, if you don't do this, then you are not going to know the amount that you're supposed to take back to your capital. You might even find that you took even the capital itself, the 100K, and used it as an expense, and then it means that your business is going down, because if you took 100K and then the only amount that you are returning to capital is actually 50K, then the capital has reduced from 200 to 150K, and this is how your business is going down. So ladies and gentlemen, if you have any business, normalize coming up with a very simple income statement that is going to tell you your expenses and your liabilities, so that you can get the amount that you're supposed to distribute. Now, having said that, let me go to my point number 3, why your business is going down. Number 3 is what we call emotional decision making. Hapa sitaongea sana. I'm not going to talk about this so much. Emotional decision making. There are some people who own businesses, and whenever they receive a call, because they are so much emotional, I need this and this, I have something that has happened and I need urgent money, they are going to act very fast. They are going to submit their money. They might even end up using their capital just to help their family members. And sana sana hii kitu will happen kwa family members. You take even your business capital, you send it, and then you kill your business without even thinking. Remember, money does not need emotional thinking. Money does not need emotional decisions. You need to be upright when you're making financial decisions. Now, like I said, I'm not going to talk more about that. You know about this. You know what happens when you make emotional decisions when it comes to businesses. It goes down. Ladies and gentlemen, thank you so much